very important topic with a lot of the clients that we work on, both on the banking side and the capital markets side. As far as the implications of stress testing and the regulations.
A registered swap dealer. As a result of that, we have a lot of regulatory challenges that we're facing, and I wanted to get a flavor of where the market is heading and some of the challenges that other firms are looking into as well.
I think there's a lot of interesting topics. I mean, CVA was the one that I sort of read in the headlines. I think there was some great talk about wrong way risk and how people are trying to deal with it.
Thank you very much to PRMIA, the Harmony Club, Quantifi, and Capco for hosting this wonderful event that's extremely topical and timely at this very moment. I know you guys will enjoy it.
Good evening, everyone. Thanks for having me speak tonight. Dimitri's absolutely right. There's a lot of things that keep us awake as risk managers. And as you graciously alluded to in the bio, I am head of Counterparty Risk for Wells Fargo.
Tammy, the point you made on the smaller firms not being prepared to handle cross-asset CVA calculations, and that's very true. And I've been working with numerous firms in this particular space. So if you're an average firm on the street and you want to clear your transactions, OTC derivatives transactions, you probably need to be either a member of a CCP or go through a clearing broker.
Biggest issue in quantitative space, in calculation space, and I pick wrong way risk. And there are most interesting kind of feature, and Doug probably will correct me, that there is not only wrong way risk but also right way risk.
Use of an FEA as a charge against the trading desk is something that will create discipline in the traders, largely because of the way that you really arrive at a problem with FEA is in situations where you have an uncollateralized party on one side and you have a collateralized party on the other side.
Do you, or has anyone done any research or study kind of where those costs start balancing out?
I don't know if this is for Doug or Tammy or who this is for, but I'm wondering if you have some insight as to how much the products that were mentioned earlier, the futurized swaps, might benefit from all this stuff that we're seeing.
Any thoughts on CVA securitization as a way of hedging CVA risk?
Okay, as I said, we are amazingly punctual, so it's right on time. We can continue our lively discussion during reception. Let me thank our panel.
Really good questions from the crowd tonight, and that always makes the panel discussions more interesting whenever you can get some perspective from the audience on what they're thinking about.
We're going through so much change right now, and all of those changes kind of interact with each other, which I think makes things very interesting. And I think having a diverse group of people who are seeing things from a different perspective and all of the changes that we're going through simultaneously, I think leads to some valuable discussion.
The firms that do CVA and are subject to new regulations, and also firms that don't manage their CVA properly, and how they're going to deal with the differentiation.
But there were some really good questions around central counterparties and the CCPs, and how the market is going to deal with the concentration of risk that will reside at the CCPs, and whether or not adequate capital will be held against those concentrated exposures, how you'll measure your risk to the guarantee fund, and and thinking through what the longer term consequences can be of the cleared OTC world.
The panel was able to bring some light to some of those, at least, as a broad sense in terms of like the CVA calculation and some of the things that especially the gentleman from Blue Mountain Capital, that was quite insightful.